All right, hello everybody. We're gonna jump right into this Robinhood portfolio. Looks like today was a good day, up $164, and in the after hours, I'm up $5. So we're gonna talk about some stocks, guys. As always, in the Robinhood portfolio, I've been thinking a lot lately about the markets in general. There's been a lot of talk about 2020. It's about this recession and the yield curve. It has inverted, and just a lot of troublesome stuff ahead. And the thing is that, guys, you got to do what's best for your portfolio. You got to have trust in your portfolio. I've asked myself several times, what kind of trader am I? Am I a swing trader? Am I a long-term investor? Am I just a day trader? And for some instances, I find myself kind of just trading a lot, and I might trade waste all my day trades for one day, and then I might do a swing trade here or there. And there's some stocks that I like to hold long term, but for the past month, you guys can see I'm up $51. Past 3 months, I'm doing really good. I'm up 13%. And for the past year, I'm only up 4%. So, once I start day trading and this and that and losing money and then losing my gains and this and that, I want to just try to focus on these dividend-paying stocks, because I feel like dividends, I've said this before, dividends, I think, is going to be the key for me. I think that dividends are going to because me getting paid for doing as little as possible is something that I do enjoy. And, I do, as much as I love capital appreciation and growth, I just think that dividends are the way to go for me, specifically me, that I'm much older. I wish I was investing when I was like 20 years old or something like that. But, as I get older, I feel like these dividends are going to be very, very important down the road. So if you're looking at the Robinhood Portfolio titles, the title, it's called Building a Fortress, and that's what we're going to be talking about in this portfolio. We're going to be talking about ETFs. We're going to be talking about stocks. And let's begin with the Vanguard Total Stock Market ETF right now at $143. You guys already know I didn't sell anything. 50 shares, 121. Average cost up $1,000, 18%. Pretty good there. But something I want to highlight in the portfolio is the dividend. And this is what I love to see, guys. This is the reason why I hold these high dividend ETFs. Scheduled date, March 28, 2019. Number of shares, 50, 77 cents. The total amount, $38, guys. $38 for doing absolutely nothing. And the portfolio on March 28 is going to skyrocket up thanks to that $38. But, a lot of people can get that $38. They can do some day trading. They can do some swing trading. For me, I just like doing nothing. I like buying stuff, doing nothing, and this is how I'm going to roll here. So $38, a huge, huge deal for VTI, and that's a lot of compound investing going on. Let's talk about SCHD, the Schwab U.S. Dividend Equity ETF, $52. Right now, average cost $50, 50 shares, total return, some nice capital appreciation of $86. But more importantly, the dividend, which was paid out on March 25th, I did get paid $17. So, again, it's all about keeping things in perspective, keeping the portfolio in the right direction, and we're going to really try to compound this dividend, guys. So the next couple of weeks, I've been talking about maybe getting some passive income, maybe generating $50 worth of passive income monthly. And I was considering selling dividends portfolios B and C to put some more money into the Robinhood portfolio and start buying these high dividend paying stocks, but I don't think I'm going to do that. So we saw SCHD pay $17. So now we see PowerShares S&P 500 high dividend ETF, $42. Right now, 100 shares, something was sold. Average cost $38. Nice capital appreciation, up 10%, almost $400. But again, guys, once again, these high dividend ETFs are starting to pay out. This dividend is going to be scheduled for March 29th. 100 shares, 14 cents, and total amount would be $14. So we can already see that PowerShares S&P 500 high dividend low volatility ETF will be paying me $14, and VTI is going to be paying me $38. So right there, guys, that's like putting $50 worth of passive income, $50 of passive income of not doing anything at all, and the portfolio is going to skyrocket once these dividends get paid out. So we talked about building a fortress, guys. What can we do to keep getting paid for doing as little as possible? So we have to start thinking outside the box here. We need to start buying these high dividend paying stocks, the ones that are on sale. And when we talk about the ones that are on sale, we're going to take a look at some of my low positions. Apple, 188. After hours, looking pretty good in the after hours. Actually, one point up 0.67%, and still have my 3 shares. Average cost 172, and I'm total return up 9% on them. So Apple, pretty good stock. I don't think I'm going to sell Apple. I think Apple's pretty much the only tech stock that I like. I do like Microsoft too, but when I look at valuation, see, this is the thing, guys. That, I do look at valuation sometimes, and I do agree with Buffett. Sometimes looking at the price is not investing, but I mean, obviously, as an investor, you want to buy stuff on sale. I mean, Apple was still at a good price at 172. At least I thought it was still at a good price at 172, and Apple got all the way at least as low as 142. So I definitely wish I would have just went all in on Apple when it got down to $142. But it is what it is. Apple's a great company, and I would love to add to my position if it ever goes lower. So you guys can see some key differences in the portfolio. I think MasterCard's gone. I think I did sell NVIDIA today. I think I got it like $180 or something like that. But I'm not going to focus on growth stocks. Right now, I want to get paid dividends. We're talking about high dividend stocks, high dividend ETFs. We're talking about dividend aristocrats. Here's one right here. Walgreens, still at a good price, $61. They do have a earnings call tomorrow, I believe, and I think their EPS is at 175. I'm going to just take a look. Yes, it is. So they have an expected EPS of 175. I do believe they can beat that, but if they don't beat that, I think the stock is going to drop even more. And if it does drop any more, I'm probably going to buy some more shares. I'm hoping to get this probably up to about, I want to say 25 shares of Walgreens. Total return $14 to up 2%. Average cost $60, and I think the low was at 59. So that's definitely a good buy. Dividend Aristocrat, they have proven to increase their dividend over time, and this is really underrated stock, guys. Walgreens is not going anywhere. I know CVS Pharmacy has a little bit more risk with the whole Aetna plan, but Walgreens knows what they're doing. I do like the company a lot, and they are dividend aristocrats. So it's up to you whether or not you want to buy them or not. So we're going to talk about new residential investment trust, $16.88. Let's take a look at my position. They do have an ex-dividend date coming up, 25 shares. The goal for this stock is probably 100 shares, maybe 150 shares, because they have such a high dividend. But this is part of the fortress that I want to build. I want to put some staples in here like Coca-Cola. I want to put some high dividend paying stocks like NRZ. Pretty good stock. I'm up $5 on them. But NRZ, they're a company that's really interesting. Even with the high dividend yield, they have been able to maintain that dividend. And the thing is that when a recession does hit, I'm not saying it will, but I actually believe that there's going to be one more major correction before this recession that everybody's talking about is going to hit. I think we're going to see a major pullback, but it's not going to be an actual recession. And I think a lot of these stocks are going to get tested. A lot of these companies are at all-time highs. I was looking at MasterCard the other day, and I'm like, man, why am I buying this? Because this is at all-time highs. I think Waste Management, all-time highs. Microsoft, all-time highs. As an investor, valuations matter. But again, I do agree with Buffett when he says looking at the price, it's not actually investing. You want to buy good companies, and I think new residential investment trusts. I do think they are a good mortgage MRIT. I think they're one of the better real estate investment trusts on the market, but they probably will be tested. Or at least that dividend will be tested when the next recession actually does hit. But for now, this is going to be a part of my fortress plan, or so to speak. 25 shares. I'm going to pay 50 cents per share, and we're talking about $12 from this stock. So they do have an ex-dividend date coming up on the 29th, I believe. So NRZ, I think this is one of the better real estate investment trusts on the market, and a proven winner. They've really been knocking the ball out of the park lately. And the last company in my portfolio is AT&T. I sold NVIDIA, which got up to $180, and I bought some AT&T shares. Right now, priced at $31.36. Pretty good company, a very, very large company. I know they have a lot of debt, but they've said that they want to pay off their debt, and a lot of people are starting to buy back into AT&T here. A lot of people sold off once they acquired Time Warner because that increased their debt load. But they have mentioned before several times that they do want to focus on paying off that debt and they want to free up cash flow. Right now, I have 50 shares, and that's like a really sweet spot for me. Average cost 31.06. I think that's a pretty decent average price to be at. I would like to get the stock a little bit lower, maybe around that $29 price, but portfolio diversity 9%. I'm up $14 on this. So AT&T, another stock that's going to factor into my Fortress plan here, and it's going to pay me $25 for holding these shares as long as I hold. They have an ex-dividend date coming up in April. That's another reason why I bought them, and I went all in on AT&T. And actually, I'm using AT&T as my provider, so I guess it makes sense to buy them. I do think that this company, I think people are starting to buy back in AT&T. Right now, it's gotten up to $31, but that dividend yield, I think it's around. I think that actually is accurate. It might be around 6% or so, but AT&T, pretty good company, a very large cap company, and I like them a lot. So you guys can look at my watch list, and you guys can see I'm also looking at Coca-Cola. So, when you're buying these dividend-paying stocks, guys, they're boring. But, again, I'm talking about getting paid dividends, guys. AT&T is going to pay me $25 for these amount of shares, $12 for NRZ. Walgreens, Boost Alliance, they'll pay me like $5. And then we have like these high dividend ETFs going off and paying like $38, $14, $17. I think that's CHD. They paid $17 or something like that. The M1 Finance Portfolio is paying out. So there's a lot of projects, guys. There's a lot of projects going on, and this is part of my Fortress plan. Speaking of which, there's another stock that I was looking at. I'm not sure why it's not on my watch list, but Enbridge is another good one that I want to see if I can probably buy a lot of. I'm waiting for this to probably get around that $32 mark, somewhere around there. I don't think it's going to get back down to $32, at least not for a while. But if there's like a major pullback, I definitely think this stock will go down to $32. And they have a pretty good dividend yield at 6%. So this is another stock that I want to put into the portfolio, and definitely want to try to get like 50 shares of them. So this is part of the Fortress plan, guys. Tell me what you guys think? Is it better to prepare for a recession now? I'm not actually preparing for a recession. What I'm trying to do is stack as much dividends and assets as possible so that the dividends sort of outweighs my losses on red days. So on red days, it really won't affect me that much because I'm getting paid so many dividends. And, I think that that's the way to go, at least for me, heading forward. I'm not going to really focus on growth stocks anymore. I would love to own the Amazons, MasterCards, Visa, and all this other stuff. But it's not the fact that they're I don't want any growth stocks, but those stocks are at all-time highs. I would love to get those stocks on cheaper deals, but AT&T, KO, Enbridge, they're going to be a part of this plan. Yeah, I'm gonna drive that dividend into the ground and really just milk it because this is incredible. VTI is gonna pay $38. I think this is the most I've ever gotten from a stock or ETF, $38. So that's already one share of AT&T right there, which is pretty good to see. But let me know what you guys think. Portfolio is sitting at $17,234. We're going to start building this fortress, guys. And when a recession does hit, all stocks are going to go down. ETFs are going to get hit in the mouth. Everything's going to be red, but the dividends are going to be the difference. I think the dividends are going to be my way out. But let me know what you guys think, and I'll see you guys next time.